Welcome back, guys, to Overture 1. And before we get into today's topic, remember to comment, like, and subscribe. Number one, it really helps us out. And just leave your opinions down below on what you thought about this video and if you agree or if you disagree.
And in this video, what we're going to be talking about is how to trade during a recession. And the first thing that I want to get into to unbox a little bit is the difference between trading and investing, because I feel like going into speaking on how to trade in a recession, you guys need to understand that there's a fundamental difference. And the way that we define trading versus investing is trading is a session by session occurrence where, at least for the two of us, we're in and out of positions within a 3-hour window, right? Some people it's minutes, some people it could be hours. They might take it a couple days, whatever the case is. All of those different types are classified under trading, right? And investing is when you're making plays for a much longer period of time. Some people investing could be only a month or a couple months, or it could be upwards of years depending on the type of investor that you are.
But just to let you guys know, we need to establish the vocabulary, number one, what the terms actually mean before you guys get it confused, because trading and investing are very much different. And we also want to speak in terms of, in times during uncertainty, sometimes it is better to trade than actually invest. Because why? Think about it from a grander scale, guys. Like, if you're watching our channel, then you're not like the rest of everybody else, right? Trading is literally, like you said, short term, short in and out. You know, you only risk 1% of your account or 2% or whatever. It's nothing really too big. But when you get into investing, sometimes there's no stop loss for investing. Sometimes people choose a bias. They're like, okay, Ethereum, $7,000. We're going to get there, buddy. All right, awesome. So you buy at 4K and you expect it to hit $6,000 in 2 months. And it doesn't. And it keeps going lower and lower and lower. And then now you're like in drawdown to 75% of money. As opposed to when you're trading, let's say you even lose three trades in a row. You're only 3% in drawdown. And let's just take it even farther. Let's say you lose 7 trades in a row, which in trading it happens. You lose 7%. But as opposed to investing, that you think you have the bias down right, and a bias is only an idea, it's not a fact at the end of the day, because a bias is just your hypothesis. So think about that, guys. Like, really go into detail and really see what trading could do for you, because investing, trust me and Jared are investors in other aspects as well too, in some cryptocurrencies. But at the end of the day, we're still traders, and we know the risk that we're accepting when we get into a position, because we know we still can be wrong.
100%. And a great point that you touched on is like, and I just want to reiterate it, like when things are very uncertain, like prices aggressively tailing in one direction or another, yeah, it might be very exciting to see your portfolio skyrocketing like 100% in a day, a couple 100%, whatever the case is. But you got to really ask yourself, how sustainable is that? And what is the better metric that you should be pursuing, right? 100% growth in a month and some crazy happenstance where everything shoots up, or a much more logical perspective of something that you can repeat every single day where you're like making 3%, risking 1%, right? So that's what we mean by think of trading as a much more calculated, you're hedging your downside risk a lot better. Even though you might have potentially like lower incremental gains, it's going to be consistency compounded over a long time. And we believe that that's a much smarter approach, especially if you're new. Especially if you're new to investing. This is something that I want to really jump into. You're not going to want to put all your eggs in one basket. And what I mean by that is not even necessarily one asset or currency or cryptocurrency or stock. I'm just saying, like, if they're even moving in the same direction, you shouldn't put all of your nest egg in that. And just to unpack that a little bit, like, you might have heard me say, oh, don't put all of your eggs in one basket. Okay, I'm not going to put 100% of my net worth in Bitcoin. I'll put it in like 4 cryptos. Okay. But if you really think about it, you're still putting your eggs in the same basket, because over the historical time that cryptos have been around, they all have a leading pair, which is Bitcoin, and they're all kind of following in suit, right? So like, if you go 50-50 Bitcoin, Ethereum, to me, that's you still putting all of your eggs in the same basket. If you buy 3 stocks that are all in the NASDAQ, that's me saying you're still putting all of your eggs in the same basket because they're a part of a conglomerate and they typically move in the same direction, right? You have a lot of major stocks that are down right now. I can think of a couple off the top of my head, like Netflix, like Shopify, like these stocks are down 75%. And to me, you're not hedging your risk appropriately by buying things that are even correlating, right? And what is a correlating pair? That's something very quick. I'm gonna have Rob jump into that pretty briefly, but you're gonna see them in currencies and stocks. Rob has a really great definition for what's a correlating pair.
Guys, so what a correlating asset is basically 2 or more asset classes that relate to each other. So I'm gonna use Euro USD and GBP USD. Majority of the time you see them trending in the same directions. One maybe a little bit higher than the other, one's a leader and then another is a laggard. Or you can look at the 3 indexes like NAS 100, US 30 and S&P 500. They're kind of pretty much ranging in the same direction majority of the time. I'm not gonna say all the time, but majority of the time they're bullish. Like one's a little higher, one's a little one below that one, and then that one, and there's a third one that's just a laggard. Just very much of a slow rising curve. And that's what Jared says at the end of the day. Like, oh, I'm gonna buy US 30, right? A US 30 is the best performing asset. You can't beat that one. And I was like, bro, NAS 100 and S&P 500 do the same thing. Does US 30 rise a little bit more? Sure, cool. But they're still the same thing. And when they do go down, it's still all gonna come down with it at the end of the day, guys. So just remember that. And also another thing that I wanted to talk about, guys, we just did release a new technicals course. And I truly believe in what our product is because we've traded for, right now I've traded about 3 years and Jared's about 3 years also as well. So we know how to read charts. Doesn't matter if it's daily, weekly, 4-hour, yearly. We know how to read it all around. And the great thing is we get to apply this in our trading careers and our investing careers. So ultimately, guys, like we are self-sufficient to a point where I don't need to listen to 17 YouTube videos with Warren Buffett, this guy, that guy. And great, they have great results. And we're on our way to get even greater results also as well. We aspire to be at the level that they're at. But look, guys, we know what to read. We are certain in our biases. Doesn't mean that we're always correct, but we don't have any uncertainty. We accept the risk and we know when to get out. Ultimately, at the end of the day, it's just, guys, when you learn how to trade, you can look at so many asset classes across the board and be like, you know what? I'm not gonna invest there because it's just way too high right now. And I need premium discount pricing to get in. And I rather stay liquid in cash for a while before I decide to use all my investment and buy that crypto or anything so far.
And something I wasn't even planning on saying, but I just want to share it with you guys is that I know I can speak for the two of us. Day trading has made us better investors. And I'm not here to like brag, boast, whatever, I'm just going to say like my approach to the markets has helped me not make very poor investment decisions. Like I was able to notice trends, and so was Rob, in like major cryptocurrency moves. We caught it on the way up last year. We also called, for example, Bitcoin selling at about 50K down to 20K, right? And it's like, we're not here to, like, if you were on the other end of that, we're not here to be like, hey, look, like, you know, we caught it, you didn't, whatever the case is. It's not like one of those I told you so's. It's like we've literally taken our day trading knowledge and converted it into a logical investing plan, and we're trying to share the same with you guys, you know. And where we started was trading currencies, and we were able to branch off into different indexes like Rob was talking about, where they correlate very well with stocks and as well as cryptocurrencies. So it's like it built us in an all-around manner to be, you would think day trading narrows your focus, but it made us very diversified in what we can attack in terms of assets. We can trade them, we can invest them, we can buy them long, we can sell them long, we can be in and out in 15 minutes, right? And we are versatile now because of the skill set that we're sharing with you guys. So we hope you take advantage of it. The link to the course is actually going to be right underneath this video in the description, and we look forward to helping you guys trade during this recession time. We will see you guys in next week's video.